Hello and welcome from me, Philip Nothard and Curtis Hutchinson, to this special Motor Trade Radio podcast brought to you in association with eBay Motors Group. Many thanks again for joining us in the latest in our series of special interviews themed around the sharing best practices and car retailers as they manage their way through COVID-19 crisis. Previous interviews, as you'll be aware, have been with people from Darren Edwards from Sittner Group, Virtue Motors Robert Forrester, Peugeot UK boss David Peel, and Marshall Motors Dash Gupta. And these are still all available to stream from Apple, Google Podcasts, Spotify, and of course the motortraderadio.com website.
For this episode, we're delighted to welcome back to the show Mike Jones, chairman of ASE plc. Good to have you back on the show, Mike.
Yeah, brilliant. It's great to be back, and thank you very much for the invite.
No, you're more than welcome. So with showrooms now open again across most of the UK and with Scotland hopefully following next week, but there's lots to talk about in terms of current trading. But before we do, can we just share, can you share any notable highlights from your recently published April dealer composites?
Yeah, I mean, it was an interesting one with regards to April because volume of submissions were understandably down. Lots of people had closed the dealerships. Lots of people had furloughed staff, including their account staff, and so the overall volume of submissions was lower. So I had to decide whether to publish or not. But I thought it was worthwhile actually trying to get some news out there as to, based on the information that we've got, what level of performance are we seeing? And we would normally expect April to deliver as a sort of a reasonable-ish results. It's the first month of a quarter. It's the first month as we get post March, so there's always a bit of hangover. But we'd expect sort of break even in April. Now clearly that didn't happen this year, but I think April and with the losses that we've published, sort of just over £60,000 for the month. That's as bad as it's going to get. I mean, that was the height of the lockdown. The after-sales departments were marginally open in some businesses or just opening up for key workers. We hadn't had the approval yet on the fact that we could do click and collect deliveries. That didn't come until May. Most people had still got their vehicle sales operations shut down as well, and we can see from the analysis that people have, the level of new and used transactions was phenomenally low in the month, as we would expect. After sales a little bit better, albeit still really quite low, but then there was some sort of compensating cost savings as obviously people were on furlough, etc. So I'll update the data as we get more and more in, and people will effectively submit for the earlier periods. But the overall loss actually was slightly lower than I think most people were expecting. Which is good, albeit it's still a significant loss for anybody to wear and for the whole industry to wear, particularly on the back of not hitting the March numbers.
Yeah, and bearing in mind year-on-year comparisons are pretty much unhelpful at the moment. But last year, the average profit was £5,000, wasn't it, for the month?
Yeah. Yes, it absolutely was, which is what we'd normally sort of expect in April. So that gives us, a sizable swing that we have to try and make up. Now, with a fair wind, we've got a chance of outperforming last year as we go through the second half. We've clearly got all the March vehicles that we didn't deliver in the last week of March to go at, plus the period of lockdown. So there's undoubtedly some pent-up demand there. And I know a lot of the franchises are looking for a level of catch-up over the course of the second half of the year, as we move through and we go at all those vehicles. But we've still got to make that loss back, and it's a big issue for a lot of businesses that may well see them loss making by the end of the year. Not being able to fully catch up, and we've seen that at some of the PLC announcements as to how they think it's going to go.
Yeah, and welcome back, Mike, and great to have you back on. And just touching on that point, and obviously, England opened up on the 1st of June, followed by Ireland, and then consequently by Wales. And as Kirsty's just said, we're still waiting on for Scotland to open again. But in terms of activity and market sentiment, there's a lot of media. I mean, we talked about it on last week's headline podcast around some of the year-on-year performances in the first sort of week, 10 days of June. What are you hearing from across the sector from some of your sort of dealer clients since the showrooms have opened in terms of overall sentiment and activity?
I mean, I think the first thing is that people are happy to be back at work. Happy to have their business, from the business owner's point of view, happy to have the businesses open and able to trade and able to try and make some profit, because when they're closed, we've just got a bit of a cost weight. So people are naturally happy, and they're naturally looking for good signs. I mean, I think as we mentioned last time, when I was on the podcast, we always expected the used car market to go first. Out of every recession that we have come out of, the used car market has always bounced first. Overseas, that was also what we saw. Demand for cheaper cars as people are reluctant to take public transport, demand for expensive vehicles as people decide to buy themselves a toy that they have been wanting for a long time. So we expected used to bounce, and that's absolutely been the case. Plenty of people out there that I've been chatting to had record used car weeks first week back. That's continued. The thing that's putting a brake on the used car performance at the moment is their ability to replenish the stock and get cars in. Whilst we haven't got the whole ecosystem open yet, sort of auctions, logistic companies are still opening up as they start to see a level of demand out there from dealers in the first instance and customers, obviously, as we go all the way through the transaction. So I'm seeing, it's starting to tail off a bit, and people are blaming supply and the fact that they want more cars, and there's still plenty of demand. There's still plenty of people searching on the relevant websites, and traffic's strong. The key question is how long it lasts, and I think from a new car point of view, we've already seen a little bit of a dip from chatting to various people and looking at some of the brand statistics. We've seen a little bit of dip in interest from that point of view. After sales remains strong. After sales is still good, with a lot of people, particularly in advance of themselves personally going back to work, wanting to get their car fixed and get, you sort of tick off all the jobs that you've got to do that you don't want to be dealing with whilst you're actually physically back at work. So no, it's been good to go back. Some of the feedback. I think the dealers have done a great job on trying to make the customers feel safe. From a PPE point of view, from how we conduct ourselves, that's gone very well. Some businesses are still can't wait to get people back into accompanied test drives, which it sounds from Boris's announcement today that we might be closer to, albeit that I think we need to be careful and sort of watch what the customer wants on all of that, and whether they do want the freedom now of unaccompanied test drives, and how we react to that.
And do you think there's been a variance of sort of return to business, those that may be a little bit more agile, and those against those that have got a lot of backlog to get through, haven't they? I mean, some of the volumes that some of the larger operators are talking about sort of pre-lockdown that they had to get through, and the volumes of staff that they've and colleagues that they've had on furlough. I mean, there's reports that some have returned quicker than one or two others. Is that something that you've heard or you've seen?
Yeah, absolutely. I mean, look, everybody's been sort of quite rightly trying to assess the level of demand and then try and react to it. I mean, we've all the way through, we've been very much pushing the fact that they need to be monitoring all the digital channels and all the customer communication and make sure they've got enough staff to get back to people there, and they're not missing out on opportunities. I mean, I think quite a few businesses have been surprised about how much business they can do using their contact center with a few salespeople or a sales manager. As we were doing click and collect as we were coming through May. So I think there will undoubtedly be a case for a lot of businesses where salespeople either aren't brought back or are brought back and moved into a slightly different role. as we get used to the way that the customer now wants to interact with us. So no, some people, a small number of businesses have tried to bring everybody back. Most people have been a bit more cautious. I mean, the one thing that the government has done in the latest pronouncements on the job retention scheme is said that if we've previously had somebody on full-time furlough, even if we brought them back now full-time into work from the 1st of July, we can put them back onto part-time working. So if there is indeed a bit of a bubble that we're through at the moment, dealers will have the opportunity to put people back on part-time furlough as we go into July and then through to October from there.
Staying with used cars, Mike, as you alluded to, there's huge pent-up demand from customers for used cars. What's your take on whether what we're seeing, certainly in those first 10 days when a lot of dealers were reporting a lot of activity increases over last year? I mean, indeed, one I was talking to said their order take was up nearly 30% year on year, purely for used cars. Now, how much of that do you think is genuine pent-up demand, or is it actual real demand?
I think it's probably going to be a combination of the two. I mean, clearly we've got, as we've gone through lockdown, people haven't been able to change cars, get cars that they wanted, and also we've had a seismic shock whereby the way that we want to work and the way that we want to travel may well have changed as we move forward. So I genuinely believe, from watching what we've seen overseas, there is a real demand from people to have cars whilst they don't feel safe on public transport and they want their own little private bubble to travel around in. I genuinely believe there's a whole raft of consumers that previously would have done without a car who now want one. And that is real demand that potentially might continue right up until we get a vaccine. That means that we can all sort of wave this this particular virus goodbye.
Yeah. I mean, talking on about new vehicle supply, and we talking briefly before we started to record, but what are you hearing about new vehicle supply in terms of existing stock? What that looking like? What's the impact in terms of timeline of orders and things like this? I mean, there's obviously in today and there's been a media release that's come out through the FT talking about that the European car plants reopened, but with output well below capacity, and they do cite things like Nissan around their sort of up and running at Sunderland, but through one line only, operating on a single shift. They talk about JLR down at Castle Bromwich not up and operational as yet. So and various, the site obviously various other manufacturers there across the European market. But what's your view in terms of vehicle supply? Because there's a balance of vehicles on the ground pre-lockdown, and then the challenges around efficiency of supply.
Yeah, I mean, I think there's certainly plenty of physical cars in the country. There's a lot of cars that were brought in for the end of March, and there was cars that were already on their way to us that had been built pre any of the lockdowns. But you're right, the car plants are assessing the current level of demand and the level of stock that they've got in the system, and are being very cautious about how many additional cars they're making. And we were talking again before the podcast and we started recording. In Germany, we've seen increasing demand on the back of an increased electric car grant for the electric vehicles, but those orders are being pumped out to 2021. The brands are in no rush to ramp up production now. They obviously already think that they can hit their CO2 targets from the EU, and so they're being cautious about the additional production that we're doing now and moving those cars forward. And I'm pretty sure we'll see that in the UK as well. It'll be very model specific and as to what the sort of supply level is. I mean, we may even move to a world more akin to the US, where people are selling in the short term out of stock. So it's like, well, you can have one of these that I've got, or one of these that I can see in the pipeline that's physical. If you're looking at an order, then we're looking at significantly further down the line.
And talking about scrappage, we can't obviously talk about new cars without sort of raising the question around scrappage. And there's been a lot of headlines, and so again, with Curtis and I spoke about it briefly on the Saturday podcast. But a lot of conversations around scrappage, a lot of debate around whether it's new, used, whether it should be on EV, on the green agenda. And now the latest is obviously around the VAT reduction rather than specific to the automotive sector as a whole. What's your take on scrappage? Do you think something will happen? Do you think it's the right thing to do? Has the government got the funds to be able to support something specific to the automotive sector or otherwise?
I mean, there's a lot of pressure that the trade bodies, the automotive trade bodies, have been trying to put on the government to do something, given the number of people that we employ and how important an industry it is. So there was a lot of requests and sort of press around the request for a scrappage scheme. The problem they've got is if they follow Germany and go with an enhanced EV grant, we don't really make those cars in this country, so it doesn't help manufacturing. It would help retailing, but it doesn't help manufacturing. The cars that we manufacture here, that in theory they'd want to support, don't necessarily fit with their green agenda, and so I think they're sort of stuck on that one. Certainly from reading the press, etc., at the weekend, all the talk was around a VAT reduction. And not really around a scrappage scheme. Now, a VAT reduction, obviously, it would help, with new car pricing. With a lot of used, if we're on the margin scheme, the actual price differential for the customer would be marginal, and that's assuming that people pass it on anyway. The one thing it would do is anything that can be used to stimulate the economy and generate a feel-good factor is clearly good for people going out buying cars, whether they're new or used. So, I think in the wider scheme, the bigger thing that would be liable to move the price would be an increase in brand incentives, as they're looking to, the OEMs are looking to shift their vehicles, and we've seen that quite extensively, particularly over in China, where there's been quite a lot of money thrown at the market to deliver the increase in volumes that they've been reporting.
Mike, does the lack of clarity over how new and used sales will actually play out, do you think that increases the importance of after sales for dealer owners and managers?
Yeah, I mean, we've always been. I mean, we've talked about it before. I'm always very much pushing the after sales contribution and effectively paying the bills for the building through after sales, and it is and remains massively important. It's as close as the motor trade can get to a regular income stream. Particularly if we've got people signed up for service plans. So after sales is really really important, or after sales and used cars, sort of discretionary used cars, where we've gone out to buy them and then we're selling them is really, really important to retailers. And we need to keep the education going, because most of the people who own businesses and manage them tend to have come from through the vehicle sales route. That's the way that the trade tends to work, and after sales can sometimes be seen as a little bit of the dark arts, and sometimes we don't get anywhere near the performance we should do out of a service department. They can frequently tend to coast, and I know a lot of businesses are working at how they can drive that to improve the overall performance, because we're going to need to look at managing costs, but also generating all the income that we can as we go through the sort of next 12-18 months.
And do you think there will be a change of attitude towards after sales and giving it more focus? Because as you said, that is the sort of dependable revenue stream.
Yeah, I mean, I think we're already seeing it with some of the dealership closures, mothballing, etc., that people are slowly working more towards the sort of hub and spoke, big shiny dealership in the middle, and then sort of after sales operations around the side. And I can, that was already a trend that I was predicting. I think that we probably pressed the accelerator on it, so it's going to happen quicker than I was originally thinking as a result of the crisis that we've been through. And I can see lots of people looking at, right, fine, well, how do we structure our market representation based on the number of vehicles that we've got at the moment and how the customer wants to interact with us? Some of the facilities we've got, okay, we need to pay for the buildings that we've got that we can't get out of. But most businesses that I'm speaking to I'm working with them on, right, fine, well, what do you need and where do you need it? And after sales is a key part of that, as to how we deliver profit for the overall business.
Yeah, and I mean, just on that, my background was as you spoke about, really. I mean, it was that through the sales, but luckily I had a very good mentors that really focused me on that parts and service, the after sales market, because once you get to your overhead absorption and start covering your monthly costs through the after sales, then you can then start putting your profit through your sales department, and it was a key area that I was very quickly trained to focus on within my previous career. So I can agree with that one, Mike. Yes, 100%. But I mean, thinking ahead, I think, as you say, the businesses are back up and running. Costs are now starting to come in, as you've mentioned, and there is this, the flexible furlough now, as they're now calling it, and there's all these things going on. But thinking ahead, as we sort of approach Q3, Q4, what advice can you give to those listening today, for preparing, budgeting and managing themselves through the sort of final couple of quarters of 2020?
I mean, I think the first thing is to actually properly prepare budgets and cash flows. I mean, the trade hasn't been brilliant at it historically, and we've almost sort of got by and only done things when it's been demanded by the banks. I think it's vital for people to know what's coming. I mean, we've seen particularly with the unwind of many businesses' fleet positions, that's actually produced a cash flow benefit for them. As that starts to ramp back up in whatever period of time it does, that will be a cash flow drain. We're obviously, as you mentioned, we're now starting to pay rent. Most people, landlords will quite rightly say, well, hold on a minute, you're open now, come on. I want you to start paying the rent. The government's sort of VAT deferral is now stopped, so we're starting to pay all those different things, and people need to make sure that there are no surprises. So, I mean, I'm very much a fan of spending a bit of time and actually producing something that's meaningful. I mean, budgets and cash flows, they're always going to be wrong. And you can't get them. You can't perfectly predict the future. But if you know what's coming at you, then you can flex and you can react a lot faster and a lot smarter when things do happen. If we do need to go for if people haven't applied for a government CBIL or syllable, then we've sort of got until the end of September really to start the process, because the overall submissions need to be made and payments need to be out by October. So we've got a little bit of time to look at it and decide whether our worst case scenario that we might have factored in there is happening, whether we're outperforming our worst case scenario, what that means to our cash flow, and really get us set for the next sort of 12 months, 2 years, using the scheme that's out there. And the other thing with regards to advising people at the moment is really watching the customer and really watching the customer metrics. How do people want to be dealt with? Making sure that we are communicating with them in the right way, because I think undoubtedly the crisis has changed people's digital adoption. And effectively, to my mind, put the fast forward button on that as well. So, even older generations now have got perfectly adept at using Zoom if they wanted to speak to their grandkids. So we're going to see a different customer as we come out of this. And I think it's the businesses that can really grasp hold of how the customer wants to be dealt with, and how they want to be made to feel special, and how they want their transaction to go based on their personal level of risk and how they see things. I think it's the businesses who really get hold of that are going to thrive as we come through.
And finally, Mike, what's your view on the short, medium and long-term health of the sector?
I'm a passionate believer that the motor retail sector is a brilliant business and the variety of different income streams that we have within it enable us to cope with crises like the one that we're currently going through. As we've seen through previous recessions, the after sales used cars, new car sort of balance is very much an asset to the sector. Having said that, I think we're going to have some change. I think we're going to have some change with regards to the physical buildings that we've got. We're going to evolve into how the customer wants to be dealt with, and so coming out the far side, we've still got the motor retailers being used as the route to get the cars to the customer. The customer seems to want the interaction with the dealer. The brands want it because it enables them to get the cars processed as a sale and off their balance sheet. I think we're going to see some continued restructuring. I'm already starting to see people contacting me with regards to looking to buy or looking to sell. So I think we're going to see quite a bit more transaction activity once we find out where we're at this particular moment in time, and people get an idea as to what the overall health of the economy is like. I think we're going to see more transactions, and I think we're going to see a changing of the dealership landscape. So we will see more hub and spoke, and the people that are still in it will make a healthy return out of it, and it will be a thriving sector because, as I said, the brands want it and the customers want it. And whilst the dealers can continue doing a great job for the customer and adding value to the customer experience, particularly as we move to electric, then I think they've got a great opportunity in the sector. We may well, though, have a little bit of a bump if we go into any form of recession. Or significant recession with mass redundancies as we go through Q3, Q4. We're going to have to concentrate on used cars and after sales to get through that, as we have with every other recession we've been through.
I mean, great insight as always there, Mike, and I think you're right. I think talking around the new landscape, it's going to be, as everybody's referring to, a new norm, and there is going to be lots of learnings, lots of things for people to understand, and as you said right at the start, there is unfortunately going to be casualties along the way, but as you've just alluded to there, we're potentially going to see a little bit more sort of M&A activity through UK, Europe, international markets, but potentially, that was always a trend that was appearing pre-COVID, wasn't it? And this has potentially accelerated some of that trend. But hopefully they'll be healthier with an increased throughput for the businesses on the back end of it. But by the sounds of it, we just need to keep one eye on today. Maximise opportunities that present themselves today as we sort of come out of the lockdown, but actually start to think ahead of that Q3, Q4, and really start to plan and think about what's sort of on the horizon. So I think that's some great insight as always from you there, Mike, and much appreciated.
No problem at all. No, I think if you look at the wider trends, there's only ride sharing's taken a bit of a pause as we've gone through this. That's got a backward step. People don't want to be in cars together and they don't want to share much as we've gone through the crisis. But a lot of the other wider trends have been accelerated. So it's going to be an exciting time to be in the trade. There's going to be so much. There was already going to be a huge amount of change over a 10-year period. And I think that's basically just been accelerated. So now it's going to be an exciting and dynamic time, I'm sure.
Yeah, Mike, many thanks for joining us. Really appreciate it. It's an important time for car dealers as they take their first tentative steps out of lockdown. So thanks for joining us today. Unfortunately, that's all we've got time for. You've been listening to this special Motor Trade Radio podcast brought to you in association with eBay Motors Group. Please like and share on social media, as it's important during these times for the dealer community to work together and share experiences and best practices. Many thanks to you for listening and supporting the podcast. Philip and I will be back with the industry headlines on Saturday, but do watch out for more special podcast interviews as we work our way through this crisis. Until next time, stay safe and stay well.